Hello, ladies and gentlemen, and welcome to this webinar brought to you by Trader's Log. Thanks so much to Dan of Trader's Log for making this webinar possible. My name is James Chen. I am the Chief Technical Strategist at City Index Group. And today I'm going to be talking about my approach to entries and exits from a trend-following perspective in the foreign exchange markets. And I'm going to be bringing you, giving you some detailed information on exactly how I approach the markets, as well as showing you some current charts where we could see the examples in play. So that's what I'm going to be doing today. Lots of big moves in the last couple of days that I'll show you in a second, in a minute on the charts. So let's get move forward real quick. And for those of you who are new to this, this will be recorded, and you'll be able to find it on Trader's Log. So you can go ahead and view the recording after it's put up there. Okay, now before we get started, just a quick disclaimer: financial trading carries a high level of risk to your capital, with the possibility of losing more than your initial investment, and may not be suitable for all investors. Ensure that you fully understand the risks involved and seek investment advice if necessary. I'm just going to leave that up for a few minutes. Or a few seconds, and then we'll move forward. Okay, and also, if you have any questions throughout the course of this webinar, please, at any time, feel free to type them into either the questions window or the chat window, and I'll be more than happy to answer any questions that you have. Okay, let's move forward. For those of you who are not familiar with who I am or what I do, my name again is James Chen. I am the Chief Technical Strategist at City Index Group. I've been an active Forex trader and analyst since the inception of retail Forex, which is pretty much since, oops, let me go back a little, pretty much since around the year 2000. Prior to that, I was trading in equities and futures as well. But when the Forex market came out, or became available for individual traders and investors, I really started gravitating towards that. Okay, Marco, yes, I will be looking at the dollar yen, euro yen, as well as the pound dollar, and that will come a little bit later after I give you just some background information on how I approach the markets. Okay, so I'm also a chartered market technician. I publish daily and intraday market analysis. You'll be able to find that on cityindex.co.uk. I've authored many different articles in these publications. I've appeared in many different places, as you can see here. And I'm the author of two books, Essentials of Foreign Exchange Trading, as you can see right here, and Essentials of Technical Analysis for Financial Markets, as you can see right down here, as well as the DVD set, High Probability Trend Following in the Forex Market. Okay, so that's enough about me. Let's move forward real quick. And let's talk about high probability trend following entries and exits. And again, I'm just going to be giving you some information on how I approach the markets, and then we're going to go ahead and move forward into the current markets. Okay, for those of you who've seen this before, I apologize. I'm just scrolling through the list of attendees right now, just taking a quick look. Okay, for those of you who have seen this before, this is basically my very simple approach to choosing entries and exits whenever you're in any type of trading situation. Okay, so as far as I'm concerned, in terms of entries, there's really one way to get in, from my perspective, the way I look at markets, the way I trade the markets. And the best way to get in for me is the right direction at the best possible price. Now, that's a very simple sentence, but what exactly does this mean? Well, there's a lot to this sentence right here, even though it seems very simple. If you take a look at the right direction, what is the right direction? Well, obviously, whenever you're getting into any type of trading situation, you want to get in, you want to have at least the direction correct. And for me, arguably, the best direction is in the direction of the prevailing trend. I'll show you that in a minute. Also, you want to get in at the best possible price. So what does that mean? Well, if you're trading from a trend-following perspective, what you want to do is you want to get in at an optimal price. And what is an optimal price? For me, it's right at or directly following a pullback, a retracement, a correction, whatever you want to call it. But that's essentially what I look for. So I'm looking to get in the right direction, which is with the trend, with the prevailing trend, at the best possible price, which is usually on some type of a pullback, a retracement, or some type of a consolidation, and then a breakout from that consolidation or pullback. And I'll show this all of this to you on the charts in a minute. Now, as far as I'm concerned, there are two ways to get out. Number one is at a loss. Okay, and of course we want to avoid losses, but losses are part of trading. So where do you place your stop loss? Where is your loss ideally placed? Well, that's where the market tells you you're wrong. And that's very easily said, a little bit harder to actually put into play. But when you look at any, if you're looking at a trend, for example, let's say it's an uptrend, and you're looking for some type of a pullback. Now, when you get into, let's say you get into a long trade after a pullback, now where is the market telling you you're wrong if you're already in the trade? Well, you know, this is why technical analysis is very straightforward, because in that type of a situation, when you're trading with the trend, and you know you're getting in after a pullback, then you could place your stop loss, you could place your risk right under the low of that pullback, because if price comes back and takes you out of that trade, then that's basically telling you, the market is basically telling you that you were wrong, and perhaps this is not a pullback. It might be a deeper pullback, or perhaps a reversal. Same thing when you're playing, when you're trading with support and resistance. If you get into a trade at some support level or near some support level, then right beyond that support level is the obvious place where the market would be telling you you're wrong. Okay, so let's say you want to get in long right around support, placing your stop loss, your risk right under that support level would be an obvious place where the market's telling you you're wrong. Okay, so the two ways to get out, number one is a loss, number two is at a profit. So when I say preferably at a multiple of your defined risk, what exactly does that mean? Well, that means that you want, you know, ideally your profit to either at least equal or, you know, preferably exceed your defined risk. Okay, so, you know, unless you're trading, your win ratio is so high that you know, you don't need to do this, but you know, for the most part, for most traders, you know, I would advise to keep your reward or your profit target at least as large as your risk or your stop loss. Okay. So that's my general, you know, approach to trading entries and exits. Now let's move forward real quick. Oh, by the way, I see that Andrew Cardwell has joined us on this webinar. Andrew Cardwell is very well known, pioneering technical analyst and trader, and he's been doing this for a very, very long time. He's best known for his pioneering work on Wells Wilder's RSI indicator. Now, if you know, Andrew might jump in a little bit later to give some his feedback on what's going on in the foreign exchange markets. But really, when Mr. Cardwell talks, I think you should really listen, because the stuff he does with the RSI is pretty much phenomenal. So hopefully we can get him to talk in a little bit, or not talk, but provide some feedback, and perhaps he could do some future webinars with Trader's Log. Okay, so let's move forward real quick. Now that's the trade entries and exits. Now let's talk about my key principle. I'm going to go through this very quickly. A lot of you may have seen this before, but this is my key principle of TPB, or trend pullback breakout. So this is essentially what I look for in any trading situation. And I'm going to be showing you on the charts in a minute where this is played out for quite some time on several of the different currency pairs, including euro dollar, including pound dollar, dollar yen, euro yen, all of the major currency pairs. I'll show you where this is played out. We've seen some big counter trend moves on euro dollar as well as euro yen, especially in the past several days. But I'll get to that in a minute. But this is my key principle for trading. Identify the trend, watch for a pullback, and trade the breakout. So it's a very simple methodology. But first of all, you're looking for the trend. And in this case, this trend happens to be up, to the upside. Okay, in any trend trading situation, what did I say before about how do you get into trade? At the best possible price. So you're looking for some type of a pullback within that trend. So here, as we can see illustrated on this diagram, we have this pullback to the downside. And you know, why is it better to get in on a pullback? Well, very simply, you get in on a pullback because if you're if you're trading long, if you're buying into the trend, then a pullback is at an advantageous price. So that's really why we're looking for pullbacks. Same thing to the downside. If we have a downtrend, we're looking for rallies within that downtrend to get into short trades. So we have a pullback here. Now, I could get into the pullback at the very bottom here, and that's the ideal place to do it. I'm not sure if you can see my mouse here, but my mouse pointer, but if you get in right here on the very bottom of the pullback, that's the ideal place to get in. But the question is, how do you know that's the end of the pullback? You don't know, okay? So you're pretty much trying to pick a top or bottom right there by getting in right there. So that's why I'm looking for some type of a breakout. Okay, so the third element of this is the breakout. Why am I looking for a breakout? Well, the breakout is telling me, or it's giving me some indication that perhaps the short-term momentum is once again going back in the direction of the overall trend. Okay, so that's why I'm not just looking for the pullback, I'm looking for a recovery of the pullback in the form of a breakout in the direction of the overall trend. So as we can see here, it makes a lot of sense, and I'll show you exactly how it plays on the charts in a minute, but this is my key principle. So you look for the trend first, you look for some type of a pullback, and then you look for, and this pullback could be in the form of a a chart pattern, a consolidation, a flag or a pennant or what have you. But I'm looking for some type of a consolidation, pullback, retracement, and then looking for a breakout in the direction of the trend. Once that occurs, you got your entry at the breakout. Now you could place your stop loss or your risk management right here under the low of the breakout. Okay, so then you have your defined risk. Once you have your defined risk, at that point you may be able to define your reward. Okay, and there are many ways to define your reward or your profit target. One of which is through the use of a reward to risk ratio. Okay, which means, let me just go back real quick to this. Again, the loss is where the market's telling you you're wrong. Okay, so this is where the market's telling you you're wrong. You got in after the pullback, and if the market subsequently comes back down and takes you out of that trade, then that's the market telling you that perhaps it's not just a pullback, it's going to be a deeper pullback, or it's going to be, perhaps a reversal. Okay, and then profit preferably at a multiple of your defined risk, and that's what we have here. We have the defined risk here. You always have to define your risk. Once you define your risk, then you can use a multiple of your risk as your potential reward. Now let me illustrate this real quick with this chart. This is an old chart of gold, but I think this illustrates the approach pretty well. Okay, so if you take a look here, we have a, let me go back real quick. Okay, so we have this uptrend here. Okay, this is a bullish trend, and we have a trend line support right here, as you can see. Now, once you have this trend, that's number one, you're looking for some type of pullback. And in this case, this pullback pulls back to the trend line. This is an ideal case, and of course it's all in hindsight, but it illustrates the point very, very well. So again, you have the uptrend here, you have the pullback. This pullback is defined by pullback to the line, okay, to the uptrend line. Now, once that pullback occurs, oftentimes you'll see that you'll be able to draw a counter trend line, as we can see here. So we have this counter trend line. This is a downtrend resistance line within this overall uptrend. And once we have this, then we could be looking for a potential breakout to the upside above this counter trend line. We see this breakout to the upside, and at that point we have the entry right there on that breakout. We have our stop loss where this little red line is right here. That defines our risk. At that point, you can use a reward to risk ratio to define your profit target. And in this, in this particular case, this looks like around 2.5 to 1 reward to risk ratio, which is pretty good for this type of a trade. Okay, so hopefully that makes sense. That is an illustration of the TPB principle, the trend pullback breakout principle. Now, just a few more things before I get to my charts. If you take a look here, this is oftentimes what I'm looking for within any trend trading situation. Okay, lately I've been talking a lot about head and shoulders and stuff like that, but what I really pay attention to more than the reversal patterns are the continuation patterns. And this, these illustrate my my point very, very well. If you take a look, for example, just at this flag over here, this is basically a trend, a pullback, and a breakout. It defines it, almost exactly my approach. So if you have a flag pattern here in an uptrend, let's say, we have the flagpole as the, as the uptrend. We have this consolidation in the flag form as the pullback or the consolidation, and we got a breakout to the upside above the upper border of this flag. And I'll show you a bunch of flags on euro dollar and dollar yen in a second, but basically this is what I'm looking for. This type of trend pullback breakout is what I'm looking for when I'm in trend following mode. And by the way, just to let you know, when you follow the trend, you're not only looking for continuations of the trend, you're also looking for potential changes in the trend. And we could see that, for example, on the euro dollar, where we had a head and shoulders pattern, and then a potential reversal to the downside down to my target, which was 130. I'll show you that in a minute. Okay, but in terms of this type of thing, we're looking for not only continuations of the trend, but also reversals of the trend as well. Okay. Okay, now just a quick note on multiple time frames. Different time frames will often have different trends. We want to seek agreement. So as I mentioned before, if we're looking to trade from a TPV or trend pullback breakout perspective, then what we're looking for is the overall trend. That's the long term. And then we're looking for a short-term breakout, and that's the short term. So we're looking for agreement between the short term and the long term. And that's, that's essentially what I look for when trading with the trend. Okay. Entry filters, I'm not really going to talk about this much, but essentially what entry filters are ways to get into any trend trading situation. So, for example, let's say you have a price, almost breaking out of a flag pattern, as we saw on euro yen yesterday. Okay, so price went up to the high. Let me just show you that real quick. Okay, let me take a look at. Oops, let me just scroll through this real quick just to illustrate my point. Okay, so yesterday in the morning we saw price go. I mean, this is sort of a flag pattern right here. Okay, so we saw price go all the way to the top of the flag pattern. I was looking for if there was any break to the upside above that flag pattern. I was looking for potential, eventual retest of the 128 high that we have up here. Now, instead, what happened? It went to the very top border of the pattern, and then it dropped like a rock down all the way down here. So, I was looking for a breakout to the upside. Instead, we had fundamental factors pushing price all the way down here to below the uptrend support line, as we can see here. Now, is that a potential change in trend? Remains to be seen, but I think it's clearer on the euro dollar, which I'll show in a minute. Okay, so what are entry filters? So, for example, as I mentioned, if we're looking for a breakout above a certain flag pattern, now you're not going to, just because price goes to the very top border of that flag pattern, you're not necessarily going to get into the long trade just because of that. You're looking for some type of filter. You want to actually see the breakout occur. But more important than that, besides the breakout occurring, I also want to see something else happen that confirms that trade. So if I see a breakout above a flag pattern occur, oftentimes, especially on the shorter term time frames, what I'm looking for is the next bar to break out above the breakout bar. Okay, and that for me is short-term momentum agreeing with the direction of the breakout. Okay. Okay, just to go through a few questions here. Is it possible to watch this webinar somewhere again? Yes, it will be posted by Dan from Trader's Log. And yeah, it will be posted, Anthony, as well. Marco, and hello to you, Andrew. Marco says, previously wanted to ask, does triangles, flags, and pennants often work out for you as as opposite happens often? Yes. Yeah, I mean, you're looking. That's what I'm looking for, confirmation after a breakout of a triangle flag or pennant. Now, in terms of that, though, you know, if you see a breakout, there are often fake breakouts, false breakouts. That's why I'm looking for confirmation of an actual breakout. Okay, so just the fact, for example, that you know, price dips slightly under a support level or goes a little bit above a resistance level does not necessarily mean I'm going to be getting into a particular trade, because I'm waiting for some type of confirmation. I want to put all the edges on my side when I'm trading, and that's essentially what I'm doing. So one of ways of doing this is through the use of the entry filter. Anne asks, which time frame do you enter trade on? This is very useful. Thank you. Thank you, Anne. In terms of time frame, what I usually look at is, you know, my bread and butter is the daily chart. Why the daily chart? Well, you know, the daily chart is a very common chart, and one that shows you, you know, major support and resistance levels, and it shows you the trend very, very well. Now, from there, I will often drill down into the shorter term time frames, especially the 4 hour and the 1 hour. So I'm going down to the, you know, usually down to the 1 hour, usually not any lower than the 1 hour. So I'm looking usually at the daily chart for my trend and my major support and resistance levels, and then I'm going down to the lower time frame, like the 1 hour chart, to look for potential entries and exits. Warren asks, do you temper pattern breakout with the realization of the longevity that a trend has been in existence? Yes. Okay. That's a great question, Warren. Do you temper pattern breakout with the realization of the longevity that a trend has been in existence? Yes, I do that because you know, the longer trend has been going. You know, often you'll see times when people say, you know, this is going to turn or what have you. But you know, the longer the trend is going, the more confidence you could have that it's a strong trend. Okay, so if you have a very short-term trend, then you know, oftentimes you don't have the confidence in trading with that trend. Rather, you know, you wait for a longer-term trend. So as you know, as we can see on euro dollar and dollar yen, which I'll show in a minute, you have you know, you have a pretty long-term uptrend on those. So yes, you know, that is a consideration: length, longevity, or the length of the trend. Varies with longevity. Yes. From my perspective, it does. Yes, Warren. Okay. Before I get to my charts, real quick, just two last things. I'm actually going to skip over this. But let's talk about confluence. And, you know, in terms of confluence, what is that? Well, confluence is essentially a coming together of your different technical tools, your different time frames, all giving you, you know, confirmation of a certain direction of your trade. Okay? So, you know, if you have, let's say you have a support level, okay, and you trade off that support level alone, you know, that for me is not as good as if you had not only have a certain support level, but you also have there, maybe there's a Fibonacci level, okay? Maybe there's also a key moving average right around there, okay? If you put this all together, and maybe the oscillator is telling you this, you know, that you should go long at that area as well. When you have all these different tools telling you essentially the same direction, then that for me makes for a higher probability trade. I'll show you a bunch of confluence factors in a minute on the charts. But basically it's just coming together of different technical factors providing stronger rationale for a certain trade, entry, exit, or direction. Okay? And this is a very, very key point. Confluence is extremely important. Now, when we talk about, just one last thing about confluence, is that when we talk about confluence, first of all, if you talk about a key support level, then you know you have a lot of big traders, a lot of institutional traders looking at a certain support level. That's fine. But if you also, at that point, if you also have a certain, let's say a 38.2% Fibonacci level, okay, Now, you have a lot of traders looking at that as well. Let's say you also have a key moving average there. Then you have a lot of other traders looking at that as well. So if that all comes together at around the same price level, then you have a higher probability that all these people or all these traders are looking at essentially the same price level, and you have a good chance or a good probability that something might perhaps happen at that level. So that's why confluence works. Okay. Okay, let's go to the charts real quick. Let me just address this question. By posting a trade after confirmation of breakout, the price may often retrace against, yes, the entry, so I would appreciate how you manage it. Okay, well, let me talk about that in a second. Leaving the position and unaltered stop or considering to exit if. Okay, so there are many ways to manage an open trade, and that's a great point, Marco. Many ways to manage an open trade. You can move your stop loss. Trail your stop loss, and that I was going to talk about that in a second, but let me go through the charts, and then we'll talk about how to possibly manage you can manage your trades. Okay, so let's talk about first of all. Let me just give the current outlook on euro dollar. So if you take a look here at this euro dollar daily chart, now this is a really interesting chart you have here. As you can see, we have a relatively nice uptrend here. Okay, so there was an uptrend here. It broke to the downside, and then it became a less steep uptrend, as we can see here, and we drew this line right here. Okay, so now from there we had many different instances of price breaking out above resistance levels and breaking out above patterns. So as we can see here, right around the 133 level. This is back in about mid-January. So we had a breakout above this very nice, you could call this a pendant pattern. You could call it a triangle. You could call it whatever you want to call it. It doesn't really matter. But what we're looking for was a breakout to the upside to continue this entrenched bullish trend. So breakout to the upside occurred. I was looking for 135, and that occurred. Okay, breakout above 135, looking for 137, and that was a very nice hit up at 137, 137 being key resistance up here, and 135 as well. So from there, price came back down to the 135 area, broke below there, retested the 135 area, and came back down to 133. At that point, we had what's called a head and shoulders pattern, which is traditionally thought of as a reversal pattern. So we have this left shoulder right here, right around 134. We have this head right up here at 137, and we have this right shoulder right here at around 135. So it's a very well-formed head and shoulders pattern on this daily chart. Now from there, once we see the hit down to 133, we could draw this neckline. This is called the neckline, okay? So we drew the neckline for the head and shoulders pattern. Now, if there was a break to the upside, I would have played that break to the upside and then looking to target possibly the 140 area, but that did not happen. Instead, what happened is we formed this rather well-formed, rather large head and shoulders pattern, and it came to the downside. Now, you talk about confluence, okay? Key confluence here, and this is very, very important. Okay, so we have this neckline right here, okay? Neckline to the head and shoulders pattern. We have the key 133 level. 133 is a very key level on euro dollar. We also have this moving average, which happens to be a 50-period simple moving average. Okay, so usually what I use is 50-period, 100-period, and 200-period moving averages. Why? They're very common moving averages, and they often are good at denoting trend. As well as oftentimes support and resistance. So we can see here that this 50 occurred right here, right around the 133 level. It occurred right here, right around the neckline to the head and shoulders pattern. And then if it broke down, which it did, looking for further downside. Okay, and then the way you could play this further downside is you could use the traditional measurement. Okay, which you take the top of the head down to the neckline, and then you take that right around the 129 area, okay? And that's actually what I wrote about today in my analysis. Okay, so not only does it break down below this confluence of support right here, okay, it goes further and breaks down below this this uptrend support line. Now, this uptrend support line is not that great an uptrend support line. It's only got one touch over here before the eventual breakdown, okay? But it's a support line nonetheless. So after this breakdown below this confluence of support, we had a further breakdown below that line, and then price action just dropped from there, targeting the 130 level to the downside, which is key round number, also key support resistance level. And what I talked about today is we're looking for a possible move towards the head and shoulders target, which is the 129 level, and possibly down further to 128 and 126.50 on a potential reversal of the euro dollar. And by the way, this is very interesting, but I was talking to Andrew Cardwell, who's again is on this webinar, but I was talking to him just several weeks ago, right around this level right here when it came down to 135. So he asked me, is this a topping pattern? And I was like, no, I'm following the trend. I'm looking for a break to the upside above 137. But he saw the topping pattern, and it actually turned out into a very nice topping pattern of that, and a possibility for a further downside for a potential reversal on this trend. Okay, now let's take a look at. Okay, this is a beautiful chart here. If you take a look at this is the pound dollar. Okay, pound dollar daily chart. Now, if you want a good example of where support and resistance really holds true, just take a look at this chart right here, okay? You could also take a look at the Aussie Dollar chart, which I'm going to show in a minute. But if you take a look at the pound dollar, this is phenomenal. If you take a look up here at 163, this is just phenomenal the way that 163 true once, twice, third time, and the fourth time. Okay, so and the fourth time here, yeah, it did go way above 163, but this is what is called a shooting star pattern. Okay, now you talk about confluence. First of all, what are the confluence factors here that perhaps there might be a turn to the downside? Okay, number one, we have a hit at 163, strong resistance. Okay, number two, we have this shooting star pattern. Okay, and this is sort of like a doji shooting star pattern, or a gravestone, or doji, or whatever you want to call it. Doesn't really matter. What's really important here is that we've got a long upper wick to the upside. It goes to the upside. It comes back down. It becomes rejected at 163. It forms this this doji shooting star, whatever you want to call it. Okay, it talks about rejection, failure to move to the upside, and then the subsequent move to the downside. Now, did I know it was going to go all the way down here? No, absolutely not. But there were clues all along the way that that this was looking bearish, and perhaps, just like we see on euro dollar now, perhaps there was going to be a turn to the downside. Now, what was the key level here that I saw? This was this uptrend support line. So again, very good example here on pound dollar of where you could see how strong support and resistance actually, how well it works. If you take a look at 163 here, but not only that, you look at dynamic support in this uptrend support line. We got to hit here, 2, 3, 4, 5, 6 before eventual breakdown. Okay, this was a really strong uptrend. Now, Warren, going back to your question. Okay, going back to your question, Warren, regarding this, longevity. Yes, I mean, if you're looking for longevity here, we've got a really valid uptrend support line here. And then this is a pattern breakout. This is essentially a pattern breakout, or a breakdown in this case, a breakdown of this long uptrend. So, it helps that this was a very valid line, and then we got a strong break to the downside. And this strong break to the downside not only broke down below this very nice uptrend, it broke down below the 160 level, okay, which is a key level. Once it did that, then there's a potential confirmation of further bearishness head after 160, looking for 158.25. And then it moves down further to the downside, and then it has this pattern, the consolidation, but then further downside. And I had successive levels of targets to the downside just from prior support resistance levels. And as we can see here, we're well on our way to 150, and that's if you take a look here, 152.50 area, not exact here, but it's an area. And then a breakdown below there, lots of chop around here, but eventually looking to 150 to the downside. And that's been my target for quite some time if there was a breakdown below these successive levels, as you can see here. Okay, questions here. Marco, what do you think of cable now? And can you comment the descending price once went below 153? Yeah. Marco, this is cable right here, and yeah, you probably put that question in before. But yeah, this is phenomenally bearish and really nice downtrend, and any of this could be played in terms of short-term breakouts in the direction of the prevailing trend, which in this case is down, obviously. What do you think now of cable? Wait, let me see. Marco asks, technically one would go long at 153. Long at 153, yeah, I don't think so. I'm trading with the trend, and the trend is very strongly to the downside, as it has been for quite some time. Okay. Oh, I forgot to tell you here, which is just just another side note here. We have as you can see here for this confluence. Okay, what I was showing you before, we have 163. We have shooting star doji. Okay. We also have what's called bearish divergence. Okay, and Andrew Cardwell will be able to talk to you a lot about that. He's a master of that. But here is just a simple bearish divergence. We have a higher high in price, okay, a lower high in the oscillator. This happens in stochastics. A lower high in the oscillator, potential loss of upside momentum. Oscillators are essentially momentum indicators. So if you're looking for a divergence between the oscillator, you're looking for price to somehow correct that divergence or that disagreement between momentum and the price. So in this case, we have another confluence factor telling us that perhaps, at this point, the direction is down. Okay, especially after we have a breakdown below this this doji. Okay, then at that point, perhaps we're looking to the downside here. Okay, for maybe a short-term short, or look for a longer-term, especially with this breakdown below 160, longer-term move to the downside. So for now, for the time being, I'm still looking to the downside on pound dollar. Okay, now this is a really interesting chart. I bring this up all the time. Why? Just because it's just been phenomenal for the past several months. If you take a look here on dollar yen, this is dollar yen daily chart. We have since pretty much since this low at around 77 on dollar yen, many different opportunities to go long in the direction of the prevailing trend. What happened yesterday? That was just ridiculous and pretty much untradeable unless you're a really short-term trader. But that is sort of the exception to all of it. All of this that happened prior to that. But yesterday, prior to yesterday, I had price in this converging triangle formation. Okay, or again, I don't care about the semantics. I was looking at a consolidation or some type of a slight pullback for an eventual, continuation of the uptrend. Looking at 98 from there. But what happened yesterday? A big, whipsaw move. Okay, and then today we're sort of fluctuating right below the 92 level. But prior to that, many different instances, and I'll show you this on the shorter-term chart in a minute. But many different instances of potential breaks above patterns, breaks above resistance levels that could have been played on this chart. Let's go to the questions here. I see level of slow. Warren, the level of slow stocks, stochastics helps with the analysis. Yeah, absolutely. I use stochastics, RSI, sometimes MACD, but mostly stochastics and RSI. Just to help with momentum readings. Andrew Cardwell says, should also influence the direction of the FTSE. Absolutely. Intermarket analysis is very, very useful. There was also negative reversal in the RSI around 158 on pound dollar. Okay? So this is Andrew Cardwell talking about on 158 there was a negative reversal in the RSI. Okay. Again, when Andrew speaks, you should listen. Okay, so Marco says from dollar yen, no reason for yesterday's move. Yeah, I know. That completely took me by surprise. Okay, and then I'm going to show you euro yen, which was very interesting because of what I talked about in euro yen. Bob Max, where can we see your analysis every day? Bob, and welcome back, and great to have you here. Bob, my analysis can be found every day. You could look at my Twitter feed. It's at James Chen FX. James Chen FX is my Twitter feed, and there, I'll list all the stuff, including, upcoming webinars, as well as, all my links to my analysis and all that. So definitely take a look at that when you get a chance. Okay, so many different instances of potential upside moves. What happened there? An anomaly. Okay. Okay, let's take a look at Aussie Dollar. Very, very interesting chart here. We are essentially range-bound on Aussie Dollar. So you take a look here, as I told you before, if someone asks you about the validity of support and resistance, then you should show them a pound-dollar chart. You should also show them an Aussie Dollar chart. If you could take a look here, we have such strong resistance here at 106. Resistance up here, retest over here, retest with, by the way, a very nice shooting star pattern, or graveyard, or gravestone doji, or what have you. Steve Nissen will be able to tell you a lot more about that. But yeah, we have that right there, and then we have an approach right here, and then yet another approach right here before the eventual turn to the downside. Now, in any range trading situation, especially wide ranges, as you can see, like what you see here on Aussie Dollar, you can see that there are many different opportunities to play the trend within the range. Okay, so I'm looking for intra-range trend lines, and oftentimes what I'm looking for are breaks of those intra-range trend lines. Okay, so you take a look most recently. I think we're moving towards 101.50 yet again. If you take a look, it's strong support right here at around 101.50. Not exact. I'm well aware that it's not exact, but support and resistance are hardly ever exact. But they're very good guidelines for potential changes in direction, potential, breakouts, etc. So, for here, we could be looking, so a short-term trend line right here, for after it turns to the downside, it gets rejected at resistance. Price gets rejected at resistance. It comes back to the downside. You could simply draw this little trend line here, okay? And then look for a break below there. And then from there, we had another pattern breakdown below this inverted pennant pattern, or whatever you want to call it, a break to the downside, okay? And then another consolidation. I'm looking for, settle at or around the 101.50 area. Once it does that, and if it shows some sign of moving back to the upside, I simply draw another intra-range trend line and look for potential breaks above there. Why am I looking for breakouts? Well, essentially, again, in a trend trading situation, or even in a trend trading situation within a range like we see here, I'm looking for breakouts to confirm the short-term momentum of the direction that I'm looking at. Okay? So in this case, it gets rejected up here at 106. I'm looking for the breakout to confirm that rejection, confirm that move to the downside, which it does. Now, would I get in long right now? No, because for me it's not close enough to 101.50, and again, I'm going to be looking for confirmation of a breakout back to the upside and perhaps further range play on Aussie Dollar. Okay. Okay. Any more questions, let me know. Now, let's take a look at, all right, this is Dollar Canada. I mean, we have this big move to the upside. You see all these green candles for the last, pretty much since last 2 weeks. We see a really strong move to the upside in Dollar Canada, and perhaps due for a correction. But I'm not going to talk much about that. Okay, now this is what I was talking about before. Just like on the dollar yen chart, You know, we have many instances. Well, first of all, we have the beginning of this uptrend right around here at the low at 94, and an acceleration uptrend right here at around the 101 area. Okay, so it sort of launches on that, and then moves to the upside. Many different areas of pattern breakouts, resistance breakouts, pattern breakout. Right here is pattern and resistance breakout. Okay, for the upside. So here, but a breakout above 120, breakout above 123, and these are all prior support resistance levels. Now we have to go way back in time because these are multi-year highs that we've reached. So 128 to the upside. Okay, it comes back down. It forms this this pendant pattern, this pullback. Okay, I was looking yesterday before this big drop for a potential move to the upside on a breakout above that pattern, and I'm looking for some type of an entry filter to get in. So it goes to the top of the pattern, and then it comes back down. It gets rejected right there, right around the 125 area, and moves all the way to the downside, and then it moves down to well, right now it's around the it hit the 61.8% Fibonacci retracement of this run right here. And just to go back for you know, on Fibonacci's a little bit, again here on the euro dollar chart, we had this breakdown below this line. It was not only 133 strong support resistance, it was this neckline as well. It was also this 50-period simple moving average. It was also this 38.2% Fibonacci retracement. So how much stronger do you want in terms of confluence? This is very strong, okay? So 30.2%. If there's a breakdown below there, if price is able to break down, is strong enough, bearish price action is strong enough, break down below this very strong confluence, then perhaps we're going to see the follow-through that we actually have seen. Okay, let's see. Aiken says, what is the indicator below the graphic? KS. Oh, that is stochastics. Okay, that's stochastics. Here, if you want to be able to spell it, stochastics, right here. Stochastics consists of the percent KS, percent DS. Okay, Marco, on Euro Yen and Dollar Yen, what is analysis for next forthcoming days and weeks? Great question. Okay, let's go to that. Dollar Yen, I'm still looking for the upside. You know, I was actually a few weeks ago. I was in London, and I was on either CNBC or Bloomberg News, and what they were asking is, what do you see for Dollar Yen, Euro Yen? And I was saying, you know, I'm looking for perhaps there's going to be a larger correction than we've seen, because if you take a look at this move to the upside, you see there's almost no correction here. There's almost no retracement here. Okay, and you know, in some ways, perhaps we were due for some type of a correction, which may be happening right now. Now, but I'm still, you know, this uptrend is still, in my mind, at least on Dollar Yen, is still valid, and we're looking for, you know, I'm looking for further upside, you know, after the end of this correction. Now, if you take a look at this run right here, it's moved to the, you know, it's just moved to the 50% Fibonacci retracement, which is not altogether that big of a correction, especially on a short run like this. So, you know, we have a potential for further upside move, and I'm looking for, you know, if we are able to stay above, you know, at least this trend line, or at least the 90 level right down here. If we're able to stay above that, then I'm looking for a possibility for further upside on Dollar Yen. I don't think it's run out yet. You know, in terms of Euro Dollar, you know, perhaps it has, but on Dollar Yen, I don't think it's run out yet. Okay. Okay. So this is also a Euro Dollar chart, but this is has some areas where if you drill down to the hourly, which I just did, you have many areas where you're looking for what you're looking for is first of all, the trend, the daily chart, but when you drill down to the hourly chart, you could look for potential opportunities to get in. So, for example, we have, you know, this is just the daily chart drilled down to the hourly chart with the same lines I had on the hourly chart, and you know, basically, it's much clearer here to look for potential entries into a long trade on breakouts above counter trend moves or breakouts above patterns. You know, it doesn't really matter. What is a pattern? You take a look at a flag pattern, a pendant pattern. What are they? They're basically support and resistance. So if you take a look here, where my mouse is right here, this is basically resistance here. Okay, so it's nothing different than resistance. So all patterns are resistance, and we're looking for breakouts of that resistance. So we have many different opportunities here. Breakouts of resistance, breakouts to upside within this uptrend. But more importantly, probably, is the dollar-yen chart. You take a look at all these lines here. It's very hard to see all these lines here and what mean. But basically, what they are consolidation breakouts, pattern breakouts in the direction of the trend. All it is TPB. Okay, with the exception of yesterday, all it is TPB. Trend pullback breakout. Okay. So if you drill down to the hourly chart, you can see it play out in the same manner. You're looking for breakouts of consolidation, breakouts of pullbacks, and you're drawing these counter trend lines to better inform you of where the breakouts may occur. Again, you have the trend, you have a pullback, you have a breakout. Oops. Okay. Questions here. Let me see. What is it? Okay, so on euro yen, euro yen, Marco. Let me move to that real quick again. Okay, euro yen, real quick. At this point, it's very hard to tell if there's going to be if there's a further breakdown. Then we may be looking at a potential a change in trend. But for the time being, despite the fact that it broke down below this, this is a very steep uptrend. Despite the fact that it broke down below there, I'm not jumping the gun yet. Okay, but if there's a further break to the downside, let's say down to 115.50 area, then perhaps we could be looking at a reversal. Warren asks, yeah, that's really a fundamental question that I don't really. I'm not really. I can't really talk about pushing a Keynesian for the head of BOJ indicates more central bank printing. Tim, what do you think is the lowest time frame this sort of technical analysis effective? That's a great question, Tim. In terms of the lowest time frame that I think is effective, again, the lowest time frame I will go down to is the hourly chart. Once you go lower than that, once you start getting into the 5-minute charts and the 1-minute charts, then for me it's very, very difficult. Some people find it, easier. For me, it's very, very difficult because of the level of noise, especially in the foreign exchange markets. At those levels, the noise is just horrendous, and it's very hard to trade from a pure technical basis based upon very low time frame charts. So, while technicals are what we call fractal, which means that they occur on all time frames, at the same time, they work better on some time frames than other, from my perspective, and I tend to think that technicals work a lot better on the longer term time frames, including the daily chart, etc. But again, I'll look at the daily chart, the 4-hour chart, and the 1-hour chart. Tim, do you only trade with the trend? Yes. I only trade with the trend. Okay. Does that mean I won't trade within a range? No. Okay. Because as I just mentioned before, if you take a look at the price action on Aussie Dollar for the past several months, we see a very strong range. But within that range, there's also a trend. So it depends on what time frame you're looking at. But if you're asking me, am I trading only with the trend? Then the way I define it, yeah, I am. Okay, I'm looking for strong trends. I'm looking to play in the trade in the direction of strong trends. And the times when there are very clear and well-formed ranges, then I'll trade trends within those ranges. So it's a lot of this is semantics, is in terms of what's a range, what's a trend, what have you. But essentially, yeah, I like to trade with the momentum of the market. Okay. Okay, if any of you want, I think I'm running out of time here, but if any of you want my slides or have any questions, then you could always email me. And let me go ahead and type in my email address here on the chat window. Okay. So any further questions? I think I'm running out of time here, but any further questions, please feel free to email me, or if you want a copy of my PowerPoint presentation, then you could certainly get that, or if you have any questions. So, I would like to thank all of you for your time today.